Which is the better dividend stock to buy? Exxon Mobil or Chevron? I'm going to answer that question in this video looking at 5 or 6 different metrics. So let's get right into it. Starting with the dividend yield and the payout ratio. Comparing the dividend yield, we notice that Chevron offers investors a dividend yield of 3.49%, and Exxon offers a dividend yield of 3.16%. So Chevron is slightly ahead here. And then the next metric I have pulled up here is the payout ratio. The payout ratio measures the percentage of the company's earnings per share it pays in dividends. So the lower the ratio, the more sustainable the dividend and the more room for dividend growth. So in this metric, Chevron at 30.93% is worse than ExxonMobil's 26.8%. Because remember, the lower the better in this metric. The next thing I wanted to compare the two on was quarterly revenue growth, and I don't think I've seen a chart of two companies that's quarterly revenue growth is as closely connected as Chevron and Exxon Mobil. If you've been following, I've done maybe 50 or 100 of these videos comparing two companies, and I don't think you've seen a chart as closely connected as Chevron and Exxon Mobil. However, Chevron has the slight lead here in revenue growth of 18.89% most recently, and ExxonMobil at 14.59%. As you all know, the oil and gas industry is extremely cyclical. Oil prices rise and oil prices fall depending on supply and demand, and that impacts ExxonMobil and Chevron's revenue growth up and down. As you see a lot of fluctuation here, this is more fluctuation than you will see in mature companies like ExxonMobil and Chevron if you look in other industries. The next metric I wanted to compare the two on was their operating profit margin over the trailing 12 months. And in this metric, again, they're closely connected as with the revenue growth, but Chevron has the slight advantage here and has had it for a little over a year in operating margin of 16.95% compared to 16.06% for ExxonMobil. But what I notice here is that in the up cycles, when prices going up, Chevron leads ExxonMobil in terms of operating profits. In down cycles, when oil prices are going down and revenue growth is going down, ExxonMobil leads Chevron in terms of operating profit margin. So what this tells me as an investor is that Chevron has a higher degree of fixed cost. And so when you have a higher degree of fixed costs, your profits improve faster than a rival when the revenue increases, when sales increase, when prices increase. And at the same time, your profits worsen when revenue falls and profits fall because your costs are fixed, right? So when prices go up, your costs stay the same relatively more than your competitor, and the revenue goes up, and so your margins expand. But at the same time, when prices go down and revenue goes down, your costs still they stay the same, so your losses worsen or your margins contract more than your rivals would if your costs were more variable, right? So that explains why ExxonMobil leads when prices are going down, when revenue is going down, and why Chevron leads when prices are going up and revenue is going up. The next metric I wanted to look at is cash flow from operations to sales. And in this metric, Chevron has the clear lead regardless of the market cycle, up or down. Chevron has been ahead of ExxonMobil and most recently at 21.04% compared to 19.26%. Finally, the last metric I will compare these two oil companies on is the forward price to earnings ratio, or in other words, their valuation. And looking at this, Exxon Mobil is trading at a slightly more expensive valuation than Chevron. We could pretty much call it a tie, 11.56 versus 11.34. So if I had to pick one of these two stocks to buy right now, I would say I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Chevron would be the better buy. Chevron has better performance metrics across the board. It was ahead of Exxon in several of the metrics, and it's trading at relatively the same price as Exxon Mobil. So I would recommend Chevron as the better dividend stock to buy between these two stocks right now. Alright, so that's all I've got for this video. Thank you for watching. I truly appreciate your viewership. If you like this video, I'm going to link to two other videos at the end of this one that I think you will enjoy. So go ahead and click on one of those, and I will see you over there.